The banking system is on the edge of a major crisis. The latest report from the Federal Deposit Insurance Corporation, or FDIC, shows unrealized losses have shot up to a shocking $517 billion. This financial ticking time bomb has 63 banks on the FDIC's problem list, meaning they are at serious risk of failing. According to the FDIC's quarterly banking profile, banks are now grappling with more than $500 billion in paper losses. These losses stem from the difference between what banks paid for securities and their current, much lower market value. Most of these losses are linked to exposure to the shaky residential real estate market, where rising mortgage rates have significantly reduced the value of mortgage-backed securities. While banks may hold these securities until they mature to avoid marking them to market on their balance sheets, this strategy only works as long as they don't need to sell these assets for cash. If banks suddenly require liquidity, these unrealized losses can quickly turn into real, crippling financial burdens. In the first quarter alone, unrealized losses on available-for-sale and held-to-maturity securities increased by $39 billion, bringing the total to $517 billion. This marks the 9th consecutive quarter of unusually high unrealized losses, a trend that began when the Federal Reserve started raising interest rates in early 2022. The number of banks teetering on the edge of insolvency has jumped significantly. The FDIC's problem bank list, which includes lenders with severe financial, operational, or managerial weaknesses, grew from 52 banks in the fourth quarter of 2023 to 63 banks in the first quarter of 2024. These problem banks now hold a total of $82.1 billion in assets, an increase of $15.8 billion in just one quarter. The FDIC warns that while the overall health of the U.S. banking system is not at immediate risk, the pressures are mounting. Persistent inflation, volatile market rates, and geopolitical tensions are putting immense strain on the industry. Issues like deteriorating loan portfolios, especially in office properties and credit cards, combined with funding and margin pressures, are under intense scrutiny and pose ongoing risks. But trusting the FDIC's reassurances is like trusting a weatherman who tells you it's sunny while you're standing in a downpour. If they say there's no immediate risk, it's time to get serious about protecting your wealth. FDIC insurance isn't as reassuring as it sounds. The FDIC's reserve ratio, the amount they actually have relative to total insured deposits, stands at a mere 1.17%. This means, for every $100 deposited, only $1.17 is actually covered. To put it into perspective, the FDIC has only $125 billion to cover $10.7 trillion worth of bank deposits. If many banks fail at once, this small reserve will disappear quickly. Depositors could end up with pennies on the dollar or nothing at all. And this doesn't even include the $929 billion of commercial real estate debt that's coming due on bank balance sheets, much of which is concentrated at regional banks. This massive debt load adds another layer of risk to an already precarious situation, further straining the financial stability of these institutions. We are faced with two grim possibilities. Firstly, let banks fail. This would save the dollar but destroy the economy, leaving depositors with a fraction of their money. Secondly, bail out the banks. This would save the financial elites and protect deposits but cause rampant hyperinflation, making your money worth far less. Either way, the average depositor loses. Why physical gold and silver? In these uncertain times, the safest assets are physical gold and silver. Here's why. No counterparty risk. If you can't hold it, you don't own it. Physical gold and silver are not someone else's liability. Stability. These metals have held their value for centuries, providing a reliable store of wealth. Inflation hedge. Gold and silver protect against the devaluation of paper money, maintaining purchasing power. This is a wake-up call. The U.S. banking system is navigating a minefield of potential crises. Stay informed, stay vigilant, and ensure your financial strategies are robust enough to withstand the storm. Protect your wealth now. Diversify your assets and invest in physical gold and silver. The clock is ticking, and in this financial landscape, being proactive is your best defense. Don't wait until it's too late. Secure your financial future with the enduring value of gold and silver today. For over 42 years, Swiss America has been dedicated to helping clients like you achieve financial privacy, preservation, and protection. Call John Colyer, with over 2 decades of experience, at 1-800-289-2646 extension 1031 today. No obligation, just solid education. John will help you craft a strategy that best fits you and your family's needs. Don't wait until it's too late. Secure your wealth and peace of mind now with Swiss America.